From the morning reading, for the first time since late February, money flow has begun to move higher, although volume in the New York Stock Exchange was slightly less than average yesterday. The money flow reading broke through the 2-month downtrend. A continuation higher by money flow will be one indication that large players are buying stocks, which would certainly be a bullish indication for the broad market. Indeed, yesterday's actions was very much what we've been looking for in terms of a true breakout confirmation. While volume, we would have loved to have been even more robust and more obvious of the institutional players, there was broadening money flow, broadening breadth coming in recent days, and this is not just a tickle outside of the range as we've seen so much in recent days and weeks, but this was big candle to take us up to the top of the range and really close outside the range, followed by a day which you might say, well, that's a higher close and a higher intraday, and yet at the same time it's not the most bullish candle, but that was clearly followed yesterday by a very bullish candle. And it wasn't just the S&P, but also the Dow. The Dow also had a very similar pattern. So you've got the two cousins, the S&P and the Dow, both establishing new all-time highs and new all-time closing highs, though just barely, but it's still there. And while they both had a little bit of a tail at the a wick at the top, and you had some selling right into the close to take you down off those tops, take a little bit of that momentum down, it was still a very bullish candle and in a very important place. Perhaps the story of the day yesterday was the Russell. Now it has a lot more catching up to do. I mean, we're nowhere near the top of the range, forget about all-time highs yet, but still this was a very, very bullish action by the Russell and certainly made up an awful lot of that distance yesterday. NASDAQ also was bullish, had a bullish harami. Actually, say that wrong. This is a bullish engulfing candle, so nicely bullish there as well, but also like the Russell has some room to go. Now a couple things, normally we like to see actually the Russell and the NASDAQ being the ones that are leading the market to bullish all-time highs, not the S&P. And in fact, my wife, who's the futures trader, if she sees the S&P leading the four indices higher, she will not take that trade. That is not the one that's going to have the staying power to push to all to new highs at the same time that the other indices are not participating. Now, all four indices are participating, but the relative position and strength of them is what's concerning. So, some interesting things going on here for sure. Let's get into a little bit more micro and what happened last night and try to set up today. A little bit of bullishness all the way across. All four broad market indices are up about 0.25% or so as of the time of this cut. So certainly there seems to be some continuation in the overnight. Boy, look at the overseas action. China up 3.14%. Hong Kong up 0.37%. Japan up 0.68%. Germany up 1.79%. United Kingdom up 0.37%. So obviously, if changes come in, new information comes in, that could change our opening. But as it stands right now, we would expect a bullish opening. Crude oil was down about 0.75%. The euro down big, about 0.86%. Bonds up 0.39%. That correlation, the famous correlation between bonds and indexes, has been just absolutely smoked lately. It has seemingly been meaningless, with bonds and the indices going in the same direction more often than not. Gold down about 0.5%. In terms of those macroeconomic reports for today, what we have is not a lot. We have building permits before the market opens. And that seems to be about it for today. In terms of tomorrow, the typical Wednesday crude oil inventory and you have FOMC meeting minutes. Now, most of the time, meeting minutes are a non-event, but obviously people are watching every single little nuance of the language to try to discern when interest rates will rise. If they see that there is some difference, that could cause the markets to inflect. So certainly day traders have got to stand aside during this time frame. So be aware that that's up for tomorrow. You could see trading action go somewhat flat leading into the FOMC minutes, and follow through on signals be pretty difficult. If you're looking to put on new positions, you might consider waiting till after the FOMC minutes. But more often than not, these are non-events, but it's a red flag with a purpose because it can be significant. In terms of a regular daily report, we are back to phase 3, higher highs and higher lows, and the bullish, intermediate, and long-term trend are both intact. IBD status, confirmed uptrend, GMI index 6 out of 6 with the buy signal since 511. Intermediate term market posture is now very bullish. So this is a all go, all in kind of signal in terms of position sizing from both the investor and the active trader volatility based position sizing models. Both are signaling 100%. As we look at the market posture, indeed, all four indices are in much better shape than they were at this time last week. S&P very bullish, Dow very bullish, NASDAQ bullish, and Russell weak bull. Again, the point, we would rather see NASDAQ and Russell as the strong cousins leading the charge, and the S&P and Dow also bullish, but not necessarily leaders out the pack. So that is one warning sign. Our hedge warning status is a 0+, normal with cautionary aspects. We do have the confirmation that we're looking for. I probably will drop this down to just a pure 0 if we are able to continue this another day or two. There are some other warning signs. We do have that VIX daily squeeze, but of course that comes with the caveat that it can stay in a daily squeeze for a prolonged period of time. It's a warning in that its presence is there. It is not a timing signal until it actually triggers. Skew also up over 125 is a warning. If it goes over 135, that gets to be particularly dangerous. So that is there as well. New highs, new lows. This was a better day. We would like to see this up over 300 for new highs on the New York Stock Exchange on a day that you have a record all-time high on the S&P. But 260 versus 98, that's not a bad reading, and certainly it is a positive for the bulls. This is some additional warnings, though. Our risk aversion indicators are starting to weaken. You have 3 of them that are flat off, risk off now, and 1 that is risk on but clearly rolling over. So those are a series of warnings, and really you put the risk aversion indicators, the skew, and the fact that we are so early in a breakout against a pattern where the 7 previous breakout attempts all immediately failed, gives us some cautionary aspects that we want to be mindful of. But so far, so good. In terms of our special opinions, the option income strategies, VIX is inside the acceptable window. Just got to continue to be mindful for increasing volatility in your strategy selection. Cover call strategies, I put on a couple yesterday. Cautiously bullish, 1-to-1 distribution between in the money and out of the money strikes. Gives you some downside protection should we pull back and fail on this range expansion and just go back into the range. Put selling conditions are acceptable for new core put portfolio positions in the position size that you are willing to own. I also yesterday put on a couple of those and have more on my watch list to consider for today. Consider put credit spreads with defined risk and consider scaling into your positions until the market has confirmed the breakout. We've started to see that confirmation, but I'd like to get another day or two to actually show that we are holding this area. Let's see here. In terms of sector specific, obviously this continues to heal. A lot more green here, and things are doing pretty well. As a percent change, you see not everybody was participating yesterday. Financials and information technology were not up. And certainly, again, much like what we look at with the Russell and the NASDAQ, we look for financials to also be participating in bullish markets. And if the financials are not doing well, it is very difficult for the broad market to do well. Utilities was the leader of the day, and you know, we don't generally ride bull markets on the backs of utilities. So we need technology, we need financials actually to be the leaders of a broad market rally. So I think that's enough for today. As always, if you appreciate what you're finding here, we appreciate you in turn showing that by liking us on YouTube. More information about what we do at Falcon Global is available here at this website. Performance matters, we get that. We're very transparent with our trade logs, our transactions, of our model trades, as well as the ultimate performance and outcome of that activity. Disclaimers as always, hit the pause button if you need more time to review this. And we'll see you back here tomorrow for the market preview from Falcon Global.